All right, everybody, what is up? Good afternoon. Welcome to another episode of CRL Chart Request Live, the show where you provide the request, we provide the charts. I am Spencer Israel. This guy is JC Perez. He's the guy with the charts. JC, what's up?
Oh, nothing. Just doing a little charting of the S&P 500 here, Mr. Israel. No big deal. I don't know if you heard, but the S&P 500 is one of the more important indexes out there on this here planet of Earth.
Yeah, I mean, you should be looking at the Russells, what you should be looking at.
Which Russell?
1,000, up 1.5% today.
The Russell 1000? So what, IWB?
All right, what I say? 1,000, 3,000. IWM, 3,000.
IWM is the Russell 2000 small caps.
IWM is 2? I thought it was 3.
Yes.
No? Oh,
Russell 3000 is IWV.
Oh, I can't keep all these straight. Anyway, small cap. My point is small.
IWB is the Russell 1000. Those are the large caps. IWM is the Russell 2000 small caps. Yeah. And then all 3,000 together is V.
Okay. Well, anyway, small caps up 1.5% today. That was my point. That was the point I was trying to
Spencer, you know, small caps have been here. If you want, we can dive right in. If you want to go take a look at some small caps, I got no issues with that. You know, this is what small caps look like right now. And, you know, we're at the lower end of the range, and you think it's a coincidence that every time it gets down here, the buyers step up. We know from history that at these prices, there are more buyers and sellers. There's more buying pressure than selling pressure for whatever the reason. When prior to that, there was actually more resistance, as we like to say, more selling pressure than buying pressure. Former resistance turns into support. This has been the way the market's always behaved. So, you know, we've talked about how when we start breaking 169, that would be a problem. Spencer, I remember so vividly shorting the Russell 2000 in the fourth quarter of 2018 against 169, 170, saying, okay, we want to be short, but if we break out above this level, all bets are off. And that turned out to be great shorts. Now it's the exact opposite. We only want to be long if we're above that. You see how that works?
I see how it works. Let's just pretend this whole segment didn't happen, and let's move on because I just embarrassed myself really bad, and I'm still embarrassed. So let's get to the request.
These are good points, though. These are good points, nevertheless.
Yeah, nevertheless. So if you have a request, drop it into the chat now. If you want to skip the line in the chat, we will talk about the requests from our email inbox first. Email us. Email is on the screen. questions@stockmarketmedia.com. I have a few requests from the inbox now, so we will start there as we always do with Eli Lilly. Wavy wants to short it. Surprise, surprise.
You know, I kind of was looking at it from the short side too. I'm not going to lie. You know, we've talked about this chart. You know, what ends up happening is this. Look, see, so when you go all the way back to the beginning of Eli Lilly, I'll show you guys in real time a little Fibonacci, a little how you doing there. So what happens here, we're looking at a little Eli Lilly. So when you extend from the low up to the high, you know, it takes you right here, right? It takes you right here. And that's exactly where it had stopped prior. So it's essentially, if we're below 590, you can be short. You know, remember, I wanted to sell calls against that, but there was like earnings coming up. So I was kind of waiting till earnings. I didn't want to get in front of that trade, which is good because so far that trade would have been wrong. So I'm perfectly okay that I didn't sell those calls. I shouldn't say it wouldn't have been wrong. It'd probably be flat. Regardless, not the point. I don't necessarily know that I want to be in this. If we start losing this and Eli Lilly starts to lose 600 or so, yeah, maybe, you know, you could sell that. Yeah, that's probably right. If we start breaking below 600, maybe you could start to short Eli Lilly. That's probably right. 600, ideally that 585, you can maybe add to positions, 585. Yeah, that's probably right. You could short it against 600. Yeah, I'll stick with that. Sure. Target for a gap fill down near 450. It's not a bad short.
450. Dear Lord. All right. Yeah.
Listen, again, if you're looking to short this, that's the trade. I'm not Now, remember, this is a low probability of success trade because you're fighting a trend, but the risk versus reward is going to be is going to be favorable, is all I'm saying. So understand what this is. You're getting in front of a freight train, but you're getting paid for that if you're right. That's the whole catch, but it's a low probability of success trade. Just know that going in.
All right, let's move on here. Let's look at SYM. This is Symbiotic.
Yeah, sure. This is the this is Chilean, is Spencer?
Are they Chilean?
Are you Chilean? No, they're from Massachusetts. Nope, they're an industrial stock from Mass. Yeah. Never mind. $25 billion industrial stock from Mass. What did I say? 26 billion? Yep. So here you can just extend from the high to the low, right? You know, we're kind of in the middle of that.
This is a $3 billion company. I'm not sure. Unless
Symbiotic is $26 billion. So it's a SPAC. I know you're like biased, you know, you have like this, like you're racist against SPACs, but like, you know, other people are not. This was a SPAC? Yeah, it's a SPAC. Yeah, look at this. Why do you think it all of a sudden started trading like this? That's how SPACs look. That's one of the reasons you hate them, remember?
No, the $10 thing. Yeah, all right. Okay. I mean, but no, a lot of most of the SPACs in the last couple of years don't look like that. So
I know, which is why it's been coming up on our scans a lot. Yeah, this comes up on a lot of our scans, Symbiotic.
Yeah, but even off like the IPO or the open, whatever you want to call that first handle, they usually look a lot wilder. They don't stay around $10 after the merger.
This one came down, retested it when all sentiment was really bad in the fourth quarter last year, and you got a 5-bagger. How you doing?
Okay. Yeah. Well.
So, you know, $40 is a good level for me. You know, if you want to be long at 40, I think you got to be selling at 60 though. Right? That's how that looks to me. You know, right now, right around 46, a couple of sticks today. Yeah, so this is Symbiotic, by the way, for those wondering. This is SYM.
Yeah.
You like that? Spencer's like, wow, a SPAC that doesn't look terrible. I can't believe it. Never seen it.
I can't believe it. I cannot believe my eyes, honestly. But you are correct. It is a SPAC. Yeah. Wow. Okay. The more you know, I guess. Hey, so yeah, you got one. If you bought every SPAC that SPAC'd in the last couple of years, you got one that's doing well. Congratulations. All right.
Remember the SPAC of SPACs? It was like a SPAC of SPACs.
Yeah.
Is that gone? Oh, they delisted that? You bastards. They delisted the SPAC ETF? Of course they did. I remember. Oh, what a bummer.
No. There's more than one. There's more than one.
Dude, the fact that there was a SPAC ETF is hilarious.
Try DSPC. Is that still around? DSPC?
Yeah, that looks about right.
That's more like it.
This is the D-SPAC ETF. Oh, it doesn't look. Yeah. No, it looks like it got halted in February of this year.
Oh, it's not. Oh well. Fun while it lasted.
Yeah, okay. but look at even before it got taken away. Like, just look at this thing.
Yeah. Well. What
are you gonna do? Look at that. So this is DSPC, and we'll give it a little rest in peace.
Okay. All right, let's move on here. Let's look at Modine Manufacturing, auto components. Right? I think
for sure. Monster.
Yeah. Wow.
So this is MOD. So this is a $2.5 billion auto parts store out of Wisconsin. Racine, Wisconsin. What's up with Racine? Shout out.
I've never been to Wisconsin. Shout out Wisconsin. Never been. I hear it's a pretty state.
You know, I did the drive from Chicago to Green Bay. That's a pretty easy drive.
Yeah, a couple hours, right?
Yeah, it wasn't bad at all. Nice.
Yeah.
Went up. Let's see. There's your resistance right there on the MOD. And look at us breaking out to new all-time highs. Look at this bad boy, huh? So this one part of the, of course, consumer discretionary sector, Spencer, with this auto parts manufacturer. Shout out Modine. Shout out Wisconsin. You know, big level there, right around 36. That's your big level. 36.
Why isn't auto components in like industrials or staples? I feel because like you kind of need them. You know what I mean?
Auto parts, automakers, they're all consumer discretionary. So all that auto stuff makes sense. You think that they should be industrials just like you think home builders should be industrials?
Kind of, yeah.
Right. Honestly, no, I know how you think. Yeah, and you're wrong on both cases. But yes, you know, listen, you can argue everything's a technology stock too. Why? Because they use technology, you know.
Look, I think of industry, I think of the automakers, right? That's what I think of. So
you spend a lot of time in Michigan, Spencer.
Maybe too much. Okay, so MOD. So what's the takeaway here?
So I think, listen, I think against 36, there's nothing wrong with this. I mean, this is one of the strongest names out there. There's no question. Here, let's give it a little. I'm having some trouble here with the y-axis. See if we can get this going. Come on. See, it's like driving like these stocks that have had so much action. There we go. It's like driving like a super fast car. Like you really need to be able to drive it, you know? So yeah, 63. Jeez Louise, JC. Sorry, guys. So yeah, so you know, something like that. 63, that's your next level. Right around 63. All right. That'll get you done. That's the next Fibonacci extension level. You know, we're right in between it. Thing looks great. Nothing wrong with relative strength. Nothing wrong with owning the leaders. You know, consumer discretionary, by the way, has been a leader. So have industrials. There you go, Spencer. So you get a little bit of both there for you.
There we go. Okay. What was the question about real estate? It was Ryan. XLRE getting better, but what price? ...
Yeah. You know, let's throw some RSI in there so you can see a little bit of a divergence. So this is the XLRE. So Spencer, when you were still working with Major League Baseball, you know, back in your day before you know, met us stock market nerds, and then you couldn't stay away. The XLRE did not exist. You see, all of these stocks were part of the XLF. And then they did a little spin-off, a little, you know.
I remember. It was I think it was MSCI are the ones that decided real estate was worthy of its own sector.
Standard & Poor's.
Oh, maybe
these are the spiders. So listen, right here, I think you got a couple of interesting levels right around 41, 42 that we can get back up to, right? That seems like a pretty interesting level there. And then just short term here, you can kind of go back right here and notice how momentum did not get oversold here. And you sort of have a little bit of an oopsie, right? Little oopsie daisy. You know how much the market loves the oopsies, right? Take out all those stops. That's it. Real estate's over. We're retesting the COVID lows. And then, of course, what do you get? You get the epic squeeze, at least back to 41, maybe even up towards 52. You know, that's what I would look at for that 61.8% retracement. So you got the entire, right? I would take a look at that. That was former resistance.
And you have an easy out, obviously. And
you have an easy out. So if you're looking for the trade, what's the yield on this? It's nothing special, by the way. Maybe it's higher because its ETF's gotten crushed. Still only 3.9%. So even with this thing getting crushed, you're still only getting 3.9%. You can get better in bond market, which is probably one of the reasons this thing's getting hit because you don't need it. You know?
Yeah, no. Who needs this? Okay. Right. Jan is asking about FLNC, Fluent Energy. This is a renewable energy storage
what's the ticker?
Company. FLNC, Foxtrot Lima Nancy Charlie. I have to brush up on my alphabet.
A $3.8 billion utility stock. Small cap utilities, right? This is something you don't see every day.
That's right.
Some would argue that's a mid cap. So this is FLNC.
The yield on this thing. I don't know.
The yield on this thing, I mean, it's paying you nothing. It's paying you nothing. You're not getting paid at all.
Well, maybe because it's a renewable. Maybe because it's renewables. That could be why.
Yeah, I mean, I don't know. It's listed as a utility. It's listed as a utility renewable. So I don't know what that means of what these people from Arlington, Virginia are doing. But you know what I see is some former support levels right around that 29, 30 level. And then that turned into resistance, you know. So below that, I think it's messy. I think you stay away. If you start breaking above 29, 30, come talk to me, right? Set your alerts above there. In the meantime, it's messy. You know, we can get back up there easy. The question is, can we break out above there? That's when I'd get more interested. But if this is a utility, I'll tell you what, you know, the relative strength can't be ignored because look, so FLNC divided by XLU. So let's compare it to utilities overall. And you could see.
All right, that's not as great as I would have thought, but
hold on. Let me just clean this up. So this is on a relative basis. I guess the comeback's been strong. The comeback's been strong, but it's sold off harder. Interesting. That's why we do this, right? You see, Spencer?
Yeah.
This is FLNC divided by XLU. So, all right. Interesting.
Okay. Here's a stock that I forget about all the time. Forget that this thing exists. Zachary asking about Western Digital, WDC. We talk about tech stocks pretty often and chip stocks, and this one literally never, ever comes up in conversation. For good reason, probably. But
well, I mean, listen, this is one of those old tech, right?
Yeah.
You know, when we talk about like Hewlett Packard and you know Dell and some of these other, like particularly the hardware stuff, like they're hanging in there pretty well, like not terrible. You know, maybe your resistance is probably closer. This is probably a failed breakout. It's probably closer around here is really what it is. And this was your failed breakout in that, you know, this thing started falling this thing was one of the early, this thing was already like bottoming out by the time everything else got crushed, which is really fascinating. So, you know, this has kind of been support. We're at the lower end of the range, right? I mean, I don't hate it. I don't hate it.
You don't like it either.
I don't hate it. I like buying strength, and this is just not that. But when you zoom out, the buyers have been coming here around 40. So if you're above 40, I don't hate it because you could get a double out of this, which is not nothing, you know?
Yeah.
You know, you're getting paid 4.4% dividend, by the way. Fun fact.
That's well above industry average. Right.
Yeah.
So, sure. I guess
it's an old hardware company, you know? That's just what it is.
Yeah.
Maybe this should be an industrial.
Maybe. I don't know. This thing epitomizes stodgy. It's like Intel, Western Dig, Cisco, right? HP, stodgy. Okay. What about JC? Do you have any reasons why not to buy BWXT above 70, which it's 78 right now? This is a nuclear stock.
Nuclear? What do you mean nuclear? This is an industrial stock.
Like they do nuclear power, new components, nuclear. Yeah.
Right. So this is what Strauss always says. This is what Strauss always says, that this is like one of those like ancillary companies that benefits from nuclear.
Yeah.
So this is
it's technically aerospace and defense, right? But it's like a nuclear supply, into nuclear component, whatever that means.
Yeah, I mean, listen, you know, it's just a huge base. Like, what's there? You know, I spend my whole life looking for bases like this. You know, like this is, you know, we talk about the bigger the base, the higher the space. I mean, You got your prior uptrend, right? Prior uptrend, which is a monster in and of itself, right? You got a 3-bagger plus after the initial offering back in 2015. And then what happens over a 5-year period? You consolidate sideways after a huge win, right? It takes a long time for demand to absorb that overhead supply until it does. The market proves that. So here we are breaking out again above 70. So if you want to extend from here, you're looking at about 90, you're looking at about 94. I mean, that's the level. You're looking at about $94, $95. That's the trade. You're long against 72. So if we're above 72, you stay long. Target up near 94.5. Looks great.
Right. This one's going to go on my watch list right now because, yeah, that does look like a really clean setup there. Okay, got a couple more minutes here. We'll do a couple more tickers and then we'll hop. Let's look at Cleveland Cliffs for NASDAQ Poppy. This thing was let me see. I remember when this thing went parabolic, right? Yeah, started last year. I thought it was this year actually, but it was actually last year that happened. Yeah, from January to March, April last year. Doubled, but
so here we're looking at a $7 billion steel company, right in the middle of this massive range. So here you can see the top up here. You can see sort of the bottom down here, and we're literally right in the middle. Now, shorter term, you can see this support and resistance goes back a ways. This goes back all the way back this way, right? You can really see that continuing to come into play again and again and again. So there you're looking at about that 12, that 12 level, which puts us right at the lower end of this range because this former resistance here that had been support here is now turning into support as we saw here. So the idea would be you start to see momentum changing to the upside and you buy that breakout, right? This is a commodities bull market. Cleveland Cliffs is going to participate. You need steel. Why are these coal stocks acting so well?
Right.
I think you're looking at it here. So I think if you start taking out 15 to the upside, which we're doing literally as we speak, above 15, I don't hate this trade. I don't hate this trade against 15. It's not that clean, but above 15, you really get going. You start taking out 18 and a half. I think you could have legs. I think you could have legs back up to 30. Yeah, why not?
And then for Jonathan, PayPal, which has just been a train wreck. This thing can't stop going down. It's actually not only has it given back all its move from the COVID bubble, it's kept on going, and it hasn't settled in at pre-COVID levels. It's said goodbye to those levels where it was around 100 for a couple of years there, and obviously we're a long ways away from that now. So, what do you say? What do you say?
Below 66, there's nothing to talk about.
Yeah,
that simple. Nothing to talk about below 66. You got this nice momentum divergence, but until we get back above last year's lows, it's messy. Could this be it? We rip from here, sure. But I got to see it. I'd rather pay up for it. I like it against 66. You see these former lows from last year. If we're above that, fine. In the meantime, it's messy down here. Yeah, but momentum's turning up. Like there's something there. There's something there.
Is there? Okay.
I think there's something positive to say. I don't think it's a complete throwaway. I'll tell
it's
you.
Financial. Is this financial? It's financial, right? PayPal?
I think it is now. I think before it was like technology because it's more technology. Now it's considered credit services.
Yeah. All right.
Last one. Like Visa, MasterCard, it's the same group.
Yeah. Visa, MasterCard, did they stop going up? I think they did. Right.
They've been going up for a long time.
Yeah. Okay. They stopped only for a couple of days, but they're gonna head back there.
They stopped going down. They stopped going up for a few weeks, reset a little, and now we're getting going.
Yeah.
Sounds about right. That's what it does historically, actually.
Yeah. All right, should buy that guy too. All right, last one. Let's look at Rely, RELY. Um, this is from remind me which report that's from, which scan that's from, Scissor Pro, because I look at our scans and there's like 1,000 tickers and I don't retain which is from which scan. So,
By the way, here's Visa and MasterCard.
Yeah, so
it's kind of like if you take the PayPal chart and you flip it upside down, that's what Visa and MasterCard look like.
Yeah. And there's there's no relative trend in either of them. It's the same, right? Like if you look at Visa over MasterCard or MasterCard over Visa, there's no relative strength, relative weakness.
I mean, you want to play that game? We can. You want to play that game?
It's probably like one is my point, right?
No, I know. It's just gonna be messy. I mean, there are gonna be times when one is outperforming the other. Let's see.
Not by very much. Yeah, but probably not by very much. What do we get? Yeah.
This is wow.
What?
MasterCard. This is Visa versus MasterCard. So yeah, MasterCard is the winner here. Look at that. Wow, I didn't realize that. That's really interesting. Did you know that?
No, I'm thinking.
So Visa's half a trillion at 500 million, and then MasterCard, I think because MasterCard is smaller, it's 378. So yeah, there's a market cap situation there. The smaller one is just moving more in that direction.
Yeah, more room to grow.
I guess. I mean, listen, it hasn't been outperforming for the last 3-4 years, so maybe it matters less now. Definitely outperformed quite a bit. That's interesting. Right. Interesting study.
Yeah. Well, last one, we'll do Rely, RELY. This is from Sazo Pro in the chat.
All right. So this is Remedy Global. This is a $4.9 billion software stock out of Seattle, Washington.
This is like remittances is what this is. This is remittances when you're to send to your family overseas. That's what this company does. I mean, it's in the name, Remitly, right? It's in the name.
I know, but isn't that what the blockchain is for?
That's what I was told. I don't know.
I'm no blockchain expert.
I'm sure the fees are outrageous. Oh my goodness. Anyway, whatever. $5 billion company.
Yeah, here's what you're looking for here.
Oh.
Right? So this is interesting how it's really respecting this level right here. And then it really respected these levels up here as well. That's really interesting. So there's your trade. So you can see a little hiccup that it had here. I don't necessarily think that was a coincidence. And that's exactly where the market stopped going up here. And then this 24-25 level has turned into support. You got a kind of nice little base here. Right? Why not? Why not trade that rally back up towards 35? Why not, Spencer, Israel?
Why not? Why not?
Can you tell me why not?
I mean, I see like a shorter term resistance at whatever 26, whatever that is. I don't know. But
well, it stock's at 27, so if it was resistance at 26, it's through that resistance. So
yeah, you're right. Yeah.
Listen, this one's really interesting. If it's above, it's above 25, it's above those levels. It's not terrible. Target up near 35. I've seen worse trades.
Yeah, you're right. Kind of is. Yeah, it got above that today. All right.
How many software stocks do you know are making new 52-week highs today?
Today?
Yeah.
Not many.
Right. This one is.
But in general, there are a bunch that are near there.
Yeah. Right? All right. Go count how many are making them today. See, and tell me.
Yeah. Today versus yesterday versus Thursday or last Thursday. Whatever. It's all.
I'm just saying, right? Spencer, when you look around and you don't see a lot of stocks in its group making new highs, and this one that's interesting.
Yeah.
The market perhaps tipping its hand, perhaps, Mr. Spencer.
Whatever. Okay. We got some good ideas today. A couple
Yeah.
of names that I've written down. So this has been a good show. And again, that's why we do this, is to give you guys some insight, but also it's all about ideas. That's
How was the charting? Was that good charting?
Mostly good. Mostly good charting.
Mostly good. Which chart didn't you like?
Well, the one where you couldn't get it working at I forget.
Oh yeah. These log charts, they get tricky sometimes with these big moves.
That's true. All right. If you want more of JC's charts and you are a member of All Star Charts Premium, you will get more of them tonight on the conference call. For the rest of you, you will be back with us on the next edition of CRL, I hope, which is Thursday at 1:00 with Straza and Pat. We'll see you guys there. Hit the like. Thank you very much. Have a good one. Go make some money.
Adios.